Good morning.
What's up? What's up? What's up? What's up? What's up?
Good morning. Good morning. Good morning.
And I want to just shout out to everybody out there, whether you are on the side of the road, or somewhere in Colorado, camping in a van, or cozied up in your own living room. Good morning to you and happy Friday.
Man, it was a good morning to be cozied up, wasn't it?
Yeah. It's a good morning to think about what you're going to do this weekend, because it's going to be awesome. Starting to feel a little fallish.
We got this fall, we got a new disclaimer up there. Look before driving, it says. So be careful out there on the roads.
Where did you go? Did you go somewhere last weekend? Did you get the map out?
Getting it out this weekend.
Where are you going?
I thought I was heading to Winchester, but we're heading to North Manchester because I didn't pay close enough attention to the bed and breakfast reservation.
I've got friends in North Manchester.
Well, maybe they want to meet me.
North Manchester is pretty cool.
All right.
Yeah.
I got a call this morning. Somebody went to school there and said it wasn't. So I'm glad I got some optimism in my day.
We've got another guy. Well, anyway, I don't think I've ever met anyone who said, I'm going to North Manchester for the weekend.
Yeah, don't tell anybody.
So yesterday I had a conversation with our compliance consultant, Donna, who was just cool as can be. And she described what we do here, as a fireside chat.
That's awesome.
Yeah.
We should get like a backdrop that's just a fireplace behind us.
Well, I mean, the market has not been on fire, but we will chat about that.
Yeah. I did something. Maybe Donna, I think I sent you a copy of it. Maybe Donna can tell us whether it's okay. I did a one-on-one of these for about 2 minutes for somebody to update them on something they were concerned with, and I sent them the video. I think we're cool to do that compliance wise, and if you have a specific question, we can even send you a video like that.
Yeah, that's a great way to do business.
Yeah, it's better than voicemail because it can explain the thing with a visual. Well, Eric, what do you got going on over there?
I had a question for you guys. Do you guys know who Cristiano Ronaldo is?
Yes.
Soccer player?
Yes. He's a super good soccer player. He's like the Peyton Manning of soccer in the Premier Soccer League across the pond. And he had a pretty good post that I saw, and I took a screenshot, and a reporter asked him, he's making multi-million dollars, and the reporter asked him, why does his mother live with him? And why not build her a house? And he had a really cool response that I thought provide some worldly wisdom for everyone to hear. It was a really long post, so I'll just paraphrase it for you. But his mom sacrificed growing up for him. So she worked 7 days a week so that he could eat. And she went to bed hungry, able to provide him the soccer uniform, cleats, shin guards, so that he could pursue his dreams. And he thinks that she is her greatest gift. And the end of the quote was, money does not make people wealthy. In fact, some people are so poor, all they have is money. True wealth is found in the gratitude of gifts and blessings in life. And I thought that was just super cool, that he values his mom so much that he wants her to be by his side and in his house instead of just building her own home.
So gifts are an important thing, presence, time. The first caller at 317-578-1600, Eric will take you out to lunch and buy your lunch, and his presence will be your gift.
For watching today.
Phone calls are not coming in.
The phone lines are open.
They're open.
All right, here's what's going on in the marketplace. The pessimism is hitting all-time highs in this market cycle.
Yes.
I'm just scanning down, looking at some headlines right here. Let's see here. The Ray Dalio thinks the world's coming to an end. I saw another name up here, Carl Icahn. says the worst is yet to come. This is going to be comparable to the Roman Empire, is what it says here.
I mean, that's a brutal one.
Yeah, yeah, and there's several headlines like this, and then there's several pictures of Jerome Powell. He looks traumatized. He looks like somebody held him up with a gun. And Jamie Dimon said that the stop in funding the gas and oil funding would be the road to hell for America. So
Very interesting.
yeah,
That one caught my eye earlier this week. Very interesting.
yeah.
And the thing I liked about it, we talk and we joke around here about how we have opinions and stuff like that. The other bank executives were interviewed with the same question. And the other executive gave pretty much the same answer. And you may like Jamie Dimon, you may not like Jamie Dimon, but at least he had a unique answer to give. And so I appreciate that about him.
Well, I think given the politically correct answer to that is an ignorant answer. And I don't claim to be as smart as those executives, but you can't just turn off the gasoline in the cars because you think it's going to tear up the world. You have to have a plan that we talked about last week, that clearly I think California's plan will not work because they don't even have an electric grid that can handle electric cars.
Right.
So
Right.
to say I want something and to make it actually happen is really a different, those are two different things that can, be out
If you're
there.
thinking about an electric car, I'd encourage you to think about an electric bicycle.
Well, I've
I
seen
mean,
those come cruising through here.
That's just a great way to go. I mean, you can get through town on your electric bicycle at least a few months of the year.
How fast do those things go?
There's 3 stages. The top one's like 28,
Okay.
and that's really fast.
Hmm.
Like you could do well on the Tour de France with that.
Yeah, that could leave a mark if you it's they mostly have ones I see have the big tires on them. Are they all like that?
it did quite a few.
Yeah.
But you talk about pessimism, and I have some gauges that we've talked about on here before, but I like to look at the 200-day moving average. We talk about that here all the time. I like to look at the American Association of Individual Investors, the IBD market trend, how many stocks are above the 200-day moving average, how many are below. And the American Association of Individual Investors Sentiment Survey came out this week, and it hit a new high for bears, 61%.
Is that a new high this cycle or ever?
New high for this cycle,
Okay.
last 12 months. I don't know what the ultimate would be.
Yeah.
That's a great one. I'll
Yeah.
I'll report next week. But only 17% were bulls.
Yeah.
I took the survey, and they ask you, what do you think it's going to be over the next 6 months? It's not tomorrow. So where do you think you'll land in the next 6 months? And so I took the survey, and I'm one of the few. But the greed index, you think about it from like a contrarian standpoint, the greed index, like I think it's Warren Buffett who said, be fearful when others are greedy and greedy when others are fearful. The greed index is actually looking pretty good right now.
Now help me with that one. What does that
It's
one mean?
contrarian, and so like if the market's really high, and we're everybody, you go out for lunch and people are talking about the stock market and how much they made on Bitcoin and all that stuff, that index would say, hey, might want to be a little pessimistic right now.
Okay.
Whereas right now when the market's selling off and it's bad out there, that index says might be time to take a position. And I think you and I would say it's just a good time to chill.
Yes.
It's a good time to be capital P, patient.
Yeah, and one of the things that you and I will probably talk about once we turn the microphones off is a couple of positions we've bought aren't working out how we hoped they would, and they're down in the 7 to 10% range, and we may have to take a loss on those, not because we don't like them, but if you don't stop your loss at some level, a 10% loss only requires us to make 11% to break even on that. If we let that get to 25%, then we have to have a 33% return just to get to break even. And if we made a mistake, we'll adjust those portfolios accordingly. But just thought I'd explain that to y'all, how our thought process is on that. Those two positions, we thought they looked good when we bought them, but let me just take you over to the market real quick and show you what's going on over there. This is the S&P 500, and I'm going to use a line pin real quick. So if you connect these three tops there, that shows you the trend on this thing. The black line here is the 200-day moving average. The trend of those tops is right on the 200-day moving average right now. We had this summer rally that rallied at this angle, and ironically, this sell-off, and we were talking about this a few weeks ago, we'll see what happens with the 200-day when we hit the 200-day moving average, and the slope on both of those is almost I forget the term for that type of a triangle, but it's a is that an equilateral triangle? I forget what it is, but it's a pretty amazing.
What goes up must come down.
Yeah, and I think if you look historically at most stocks in most even markets, usually the slope on the way up is very similar to the slope on the way down, and so I thought it was really interesting over there.
So it
What's
looks
going on?
like we're not necessarily testing June lows, but getting pretty darn close to it.
We are in the neighborhood, let's
Yeah.
just put it that way. And we can't predict the market, what it's going to do. I mean, we have opinions about it, what it would do. I wouldn't be surprised. We're just within 100 points or so of that low, 75 points of that low. It would seem to make sense it would test it and maybe have a little bit of a rally, is what it would seem like at this point. And we would love to get that capital that we have on the sidelines to work, but we don't really want to take extra risk when it doesn't really make a lot of sense.
Mm-hmm. Yeah, when we connect those tops like that, the three peaks in a row, it just gives me some optimism that, we've got time on our side, and we know that bull markets tend to last 2 years, and so there will be brighter days ahead. We don't know when they'll be, but there will be, and we can just stay patient until then.
They also tend to start over this line right here, and this line will keep sloping downwards.
There's a couple stocks where the 200 days coming down and the 50 has come up to it, and they're getting more and more interesting.
Yeah, and this 50-day just tells you short term it bottomed out right here because the market bottomed over here, and so that's about 50 days difference, right? So that from here to here is probably 50 days in the market, and so then this started turning up midpoint of this little rally, and then when we had the sell-off, it started flattening and turning down again. So that's just normal bear market activity, I think.
Can you also highlight the hash marks of the closes the last couple of days?
Yeah,
If you can see
right there,
there's a horizontal mark. They're hard to see.
Is this where we're at? I
Yeah,
think that's where we're at today,
that's
right
where
now.
we're at today.
Yeah. And so the line is the range for the day. And what we prefer to see is like this day right here, where the hash mark crossed the top of the day. You prefer to have a market doing that, which it did over on this little rally a couple of weeks ago. It was doing that, and then it just lost steam with I think that was a inflation surprise that just tanked that particular rally.
Yeah, we like to see the buyers coming through all the way to the close. I can't get enough. You gotta have to lock the doors with a line, outside. And that's what we like to see, but in this case, it's been the opposite of that.
This is the NASDAQ. It started peaking a lot earlier than it, maybe 60 days before the S&P peaked. It was late November when it peaked out here, and you can see this slope of connecting those tops is even below the 200-day moving average here, and the 200-day and the 50-day were converging. This again, a very similar slope on this, but this probably will pull that 50-day down, and we'll just have to keep waiting patiently, and encourage you to be patient as well with this market and with our counsel for you. Anything else on the market here?
Well, just another key indicator that we look at. We like to see how many stocks are above their 200-day moving average, and right now there's not that many. There's close to 18% are above their 200-day, so it's a smaller number than before. And again, when we stack all these gauges together, it just gives us an opinion. It's not necessarily where it's going to be in 6 months, but it gives us an opinion for today. And that really helps me with the what ifs, because it's tempting to think, oh, this is out of my control. I have no influence. These are random events. But by looking at the gauges, you can get an indication and build an argument for where you are.
I think that's true. We're not going to be perfect. We hopefully, be generally right, but we've been talking about this has been really a challenging market all the way back here when this is my gauge of the total stocks in our database, the stock number of those stocks that are below their 21-day, the number below their 50, and their number of the 200-day. And we started showing over here back in November where this started looking a little more pessimistic, where these things were getting below. So that's a long time to say, do I want to be fully in this thing, or do I want to get a little more cautious? And we're these ones where I marked with this orangish color, or I don't know what color that is, those are ones that hit new highs since I started this little gauge myself. So the number of stocks peaked out at 9,700 last week and this week, and the number below the 200-day peaked out on that sell-off back in June. We're pretty close to that same level now as the shorter term 50-day and 21-day ones peaked out in the mid 8,000s out of 9,700, which that's what we're approaching right now. And I think probably we become more optimistic the lower this thing gets. It's like if you're looking to buy a car or a house or anything, the price that you can get it at becomes more appealing and less risky at that point, if you can jump in there.
Yeah, our industry talks about 60-40 portfolios. I don't know if that means anything to you, but that would be labeled as a conservative historically portfolio. 60% of your investments might be in something like the S&P 500, and 40% might be in something like a bond index. And those types of portfolios, they've been really hit hard this year because of stocks, but also because of bonds. And it's been a really tough time to be an investor. And so if you have some bonds in your portfolio or a bond fund and you want to keep an eye, look at it, we'd be happy to look at it. But it's been tough out there unless you've had cash. And we know the cash money market, probably not a great long-term strategy when the best money markets out there earn 2% and inflation's at what? I don't even know, 11.
I don't know what it's at.
But there's a wide gap. And so the bonds aren't getting you there, stocks aren't getting you there. And I think one of the best things I've heard came from a client. She just reduced her expectations for what it takes for her to live off her portfolio. I thought that took a lot of guts to have that conversation and dial a couple things back.
Well, I think one of the thoughts I had as well, Doug, is that a bear market, which we're not in a correction, we're in a bear market. A bear market tends to pull everything down, and sometimes we can be lulled into thinking that I have the safe stock.
Right.
And we've said it multiple times on here that all stocks are speculative, and the fact that you work somewhere doesn't mean that won't go down in value. There were a lot of people that worked at Enron that stock was shooting through the roof before it wasn't. And so that connection of your emotional attachment to a particular stock does not prevent you from losing a lot of money. And so if you have a stock with a lot of shares that has held up well, and you want to talk about that, we're happy to talk to you about that as well, because it's probably, if it's held up well, what that usually indicates, it's going to come out of this bear market probably stronger than other stocks. But at some point things will hit a kind of a high level in and of itself, and there may be some hedging things you can do to protect yourself on that.
Yeah.
So inflation was one of my I vowed to point out that inflation is a gift from our politicians a long time ago, and I came up with some inflationary ideas. I put my notes: inflation stinks. Social Security, I didn't know this till recently. Social Security determines next year's pay raise by what happens at the end of this quarter. So next week we'll end the third quarter. They'll adjust their cost of living from that next week. Well, the quarter will end on the 30th, and so something probably the following week they'll say next year you're going to get this pay raise. January of this year, the Social Security pay raise was 5.9%. I'm guessing it's going to have to be bigger than that for 2023 because inflation's been more intense this year, and that in and of itself will create challenges because the amount that the government pays for Social Security is a big part of their budget, and so if that expense goes up for them, it tells me they're probably going to come looking for that money from wage earners and other people too. Then one of the other inflation things I saw, and not those of you that choose to live in Illinois, that's cool. I like Illinois. Illinois, there's some, like, I love Southern Illinois. Illinois is a beautiful place. It's just politically, it's a train wreck if you want my opinion. But the Chicago politicians in 2020 decided what they would do with their property taxes in Chicago is attach them to the CPI. And so the Chicago property taxes last year increased by 5%, and they're most likely going to increase again by 5%. And that just can't help the value of your real estate if you keep
that.
Yeah,
Highly valued real estate investment class right now. I mean, you're paying high taxes on high valuations. That's brutal.
Yeah, and that was one of the other notes I put in my notes for today, is to remind people no asset class is completely safe all the time. Like, if you've made a lot of money on a particular asset class for an extended period of time, it suggests it's about time to give it back. And that the notes that I was reading about said from March of 2007 till June of 2011, the average housing price dropped for 17 consecutive quarters. And so probably, particularly people that have bought their first time homes since 2011, have no idea that's a possibility. But that was a 4-year run where it just kept dropping and dropping and dropping. And that can be a little demoralizing if you're trying to move or something like that.
Shifting gears out of inflation, something that you do have influence on. I've been seeing this guy's name pop up in blogs I read, and Peter Thiel. How do I pronounce his name? Do you know?
I would probably pronounce it Teal.
Thiel.
Yeah.
Interesting guy, and he was credited. Don't know if it was him. Maybe you all do. But he was credited for saying, in a 12-month cycle, whether it be business, personal, spiritual, if you have 4 things that you can do during that cycle, it'll change your year. And so in 12 months, if you can have 4 things that get you excited to wake up, get out of bed, dare greatly, or maybe it's stop doing stuff. Maybe that's one of the big things, is just to stop doing stuff. But I was taking a lot of great courage from this article I read from him, talking about the big things that you're doing to make a difference. And Gimbal has done one of those this year. We have done a big thing, and you have done a big thing with us. And I know it's been hard. It's been hard at times, but the big thing, I can remember it. Keith and I were talking after looking at some different investment companies to work with. And one of the big things was the money markets. And money markets have been a juice for brokerage companies to profit. And so we're so excited to have money market options where we can help give some of that income back to the investor. And so just dare greatly. And for some of you, it's doing nothing, but for some of you who are in the thick of doing something big, whether that be with your family, a new hobby, there's something sitting on the back shelf that needs dusted off. Just 1, 2, 3, 4 big things a year could really make a huge impact on your life.
That's a good word right there. That is a good word. I started in the last year. One thing I started doing was just jotting down, try to do it every day, something remarkable that happened every day. And what that just helps me see is the really pretty monumental things that are going on in my world. And we've had some challenging things in our family this year, but in spite of those, we've seen really some divine provision in the midst of those things. And just, it's amazing how fast I forget how cool things happened. And I got a little journal and go back and look, oh yeah, that happened. That did happen. It was pretty cool. Here's something I've been doing. Been reading this book. extraordinary popular delusions and the madness of crowds. And this might make you a little sick at your stomach, but like just the fact that it's an 8.5 by 11 book.
You've always been intrigued by crowds.
Well, somebody gave me a book. I got a book over there. I owe Jeannie that Madness of Crowds book. I haven't given it back to him. But this book was written by Charles Mackay in 1841, which I don't like reading. I'm guessing that somebody brought it up to speed a little bit with a little modern English, but you have to stop and think that definitely the people in this time frame had greater vocabularies than people do today in America. And so
is that like reading the King James?
not quite that bad. Yeah. No, I just have to have a dictionary because I don't know a lot of words that they use in there. But I was wanting to point out this one. It basically says there's nothing new under the sun. And so this particular, and a lot of these are delusional investment things that people did where they just lost a lot of money. The one that I forgot the date, I think it was the 1600s. So this is, I didn't put in my notes. That's what intrigued me, was the fact that human nature just doesn't change.
Yeah.
Like it can be, the one was tulip mania that I was reading about, and it's, I'm not seeing it here. I think the tulip craze was in the 1630s. So
that's a good one to Google if you don't know.
yeah. And so in the article that he was writing about tulip mania, this sentence is what jumped out at me. It said, nobles, citizens, farmers, mechanics, seamen, footmen, maidservants, even chimney sweeps, and old clothes women dabbled in tulips.
My favorite's that last one.
Old clothes women. I don't even know what that is. I don't know. I don't even know what a footman is. So if any of you know that and want to get that to us, but if this, I think 100% rings true. If there's an investment possibility during your lifetime, and everybody is just bragging about how much money they made on it, it is time to turn down the risk in your portfolio. You don't have to make any comments to anybody, but if you remember this time a year ago, we were talking about the meme stocks and how all these people were making all this money. They were quitting their jobs.
Yeah.
It was day trading. It's been a lot of things that happens, but it was going on in the 1600s, trading for tulip bulbs. And one of the stories in the tulip bulbs, this guy was staying at somebody's house and he thought the tulip bulb was an onion and he ate it. And when I did the conversion, its current value was $140,000. I don't even know what you do.
I hope he wasn't like at his father-in-law's house or something like that. I mean, that'd be just terrible. You just ate your life savings.
Yeah, I don't even know. I was shocked when I read that. So anyway, the world has a rhythm. It just cycles, and you can get upset about the cycle, or you can just step
That's
back
what
and
those
look at it.
charts all, I mean, that's what we're doing. We're just looking at people's buying and selling reactions.
Yes.
That's all we're looking at when we look at those graphs with the squiggly lines.
And I would say, even though we didn't show a lot of positivity this week, I think we're both very.
I'm feeling pretty positive.
I am. I'm expecting to. I feel like we're getting ready.
And I don't think it's Pollyannish. I mean, I believe in America. I really believe in the innovator out there. I believe in the person who's taking risks, that they'll be rewarded, and it's reflected during a bull market run. Yes. And who knows what's going to happen in the months ahead, but I think some exciting things are going to happen. And I just encourage y'all to keep the faith. If you're feeling down and out, be sure to get outside and enjoy the fresh air, the fall-like weather. If you have questions, don't be afraid to call us, email us. If you got a specific idea, we can talk through on a video like this, particularly for you, if that's something that's helpful for you. Yeah. What's the one thing that you can do to make your calendar year great? I mean, you've got something. What is it? Yeah. There's a lot of things you can do. So pick one. All right. Well, you guys have a spectacular weekend, and we'll look forward to seeing you next week. Bye.